Hi, I'm Luke Lango, and this is Investor Place Quick Picks, where we communicate to you some of the market's best investment ideas in just 10 minutes.
America's leading innovation investor, Luke Lango's Investor Place Quick Picks.
Today, we're going to talk about a commercial space company that has been beaten and bruised recently amid a ton of insider selling, but which today represents a compelling investment opportunity for long-term investors. The company, Virgin Galactic, ticker SPCE. Now, Virgin Galactic is the space company founded by billionaire Richard Branson, which is creating a new class of spacecraft to fly folks into space for vacation. The company has tested and iterated its spaceships tirelessly over the past decade, and now is on the cusp of flying Branson himself into space this summer, and what would mark the first leisure spaceflight trip in human history. But despite this landmark accomplishment being on the horizon, Virgin Galactic stock has tanked recently. From its early February highs, this stock is down almost 70%. Why? Insider selling. But this selling isn't as bad as it appears, and there's reason to get bullish on shares on this dip. Here's why. So we have to talk about the fact that insiders are unloading Virgin Galactic at an alarming pace. First, the same VC investor who brought Virgin Galactic public through his own SPAC, Shepard, sold about 40% of his stake in the company for $213 million in March. Then, the company's founder and part owner, the aforementioned Richard Branson, sold $150 million worth of his shares. And after that, Cathie Wood and the team over at ARK Invest, a firm known for getting behind companies like Virgin Galactic, sold about $13 million worth of Virgin Galactic stock. This rampant insider selling is spooking investors, and ostensibly it should. I mean, why should you own the stock if the folks behind it aren't even willing to own the stock themselves? But we think the insider selling can be explained away without it meaning the business is going belly up. Chamath said he sold his shares because of liquidity constraints, which adds up because Chamath is a VC investor who has been very busy with a bunch of SPAC deals. Those deals require money. A lot of Chamath's money is tied up in investments. He did some profit taking to pursue a new venture. That makes sense. He even publicly claimed that he didn't want to sell any Virgin Galactic stock and that he still owns 15.75 million shares valued over $300 million. So there is nothing really too concerning about Chamath's sale. Meanwhile, Branson sold less than 10% of his stake. Also, not very meaningful. He still owns 56.8 million shares valued at over $1.1 billion. And over at ARK, well, they've been accumulating Virgin Galactic throughout March and April, during which the fund bought 735,000 shares of Virgin stock. The fund just sold roughly 590,000 shares, so net ARK still owns about 140,000 more shares of Virgin stock today than they did a month ago. Unless ARK continues to sell Virgin Galactic stock, which they may, I don't know, I think the best way to look at it, ARK selling a Virgin, is simply as some rebalancing in the portfolio and nothing more. Now, turning to the fundamentals, which are far more important, things here look really good. The company just unveiled its first Spaceship 3 VSS Imagine, and construction on the second Spaceship 3 VSS Inspire has already begun. Now that's super important because Spaceship 3 ships are much more modular in design and therefore easier to manufacture than the Spaceship 2 ships. Meanwhile, designs on a new class of Delta ships, which represent a whole new step up in terms of modularity and scalable manufacturing, which management believes will be the key to making dozens upon dozens of these commercial spaceships. Designs for those Delta ships have also already begun. Now, on the operations front, the next test flight is due in May. The company expects to fly Richard Branson into space shortly after that, and if successful, the company will subsequently reopen its bookings and make preparations for commercial space operations launch in 2022. Now, in anticipation of this rapid ramp, Virgin Galactic has added a flurry of new talent that is well equipped to take this company from the idea phase to the service phase. So, backing out here, looking at the big picture, it looks like things are going really well at Virgin Galactic right now, and that the company is on the cusp of entering its long overdue hyper growth phase. Our numbers indicate that Virgin Galactic stock is dramatically undervalued today. Based on our 10-year DCF model, in which we think Virgin will have 2 spaceports open by 2030 and will be generating $1 billion in revenue from each, we believe Virgin Galactic stock is worth more than $35 today. This agrees with the consensus Wall Street price target on Virgin Galactic stock, which is $37. We believe a successful May test flight will put shares on track toward that number by the end of summer, and that the successful Branson flight and the subsequent reopening of bookings could push the stock up to and above $40 and closer to $50 when all is said and done at the end of the year. Well, that's all we have for this edition of Investor Place Quick Picks. I hope you like what you saw. If you did, please subscribe, hit the notification bell, or smash that like button. Until next time, cheers and happy investing to all.